Welcome back to Wealthy Business, your go-to channel for insights on finance, market trends, and personal growth. I'm Roberto Loporto, and today we're diving into one of the most surprising market moves of 2025. Billionaire investor Bill Ackman, through his hedge fund Pershing Capital, has taken a massive stake in Hertz Global Holdings. Yes, the same Hertz that filed for bankruptcy during the pandemic, burned billions on Teslas, and just posted a $2.9 billion annual loss. So what's going on here? Is this a comeback story in the making, or just another high-risk gamble? Let's unpack it. On Wednesday, a regulatory filing revealed that Pershing Square now owns 19.8% of Hertz, making Ackman the second-largest shareholder. The stock more than doubled over the week, closing at $8.24 per share after the news broke. But this wasn't a spur-of-the-moment buy. Pershing originally held only 4.1% at the end of 2024. Thanks to an SEC exemption, Ackman was able to delay disclosure and accumulate a far larger position without triggering market attention. That's some next-level chess. Internally, Hertz CEO Gil West, who joined the company in April 2024, shared his excitement in a weekly message to employees. He called Ackman's endorsement humbling and said it showed confidence in the company's turnaround strategy. Here's a direct quote from West. "This endorsement is a testament to our progress, and importantly, the relentless effort each of you contributes every day." Let's not forget, this is a company still climbing out of the ashes. Just a few years ago, Hertz filed for Chapter 11 bankruptcy during COVID. When it emerged, it bet big on electric vehicles, especially Teslas, a move that cost the company dearly. In Q4 of 2024 alone, Hertz reported a $245 million loss on the sale of 30,000 EVs, part of the company's exit from what many now call a failed EV strategy. But West is optimistic. He sees Hertz as a sleeping giant, with global assets, real estate, and infrastructure in both the car rental and used vehicle markets. He told employees the journey hasn't been easy and the path ahead won't be easy either. But we didn't sign up for easy. And here's the interesting part. Ackman clearly agrees. This isn't a guy who invests based on hype. Ackman is known for deep, conviction-based plays, often turning around companies others have written off. Think of Chipotle, Howard Hughes Corp., or even his famous short on Herbalife. So what does this mean for investors, especially you, our viewers at Wealthy Business? Here are 3 key takeaways. Turnarounds take time, but smart money moves early. Ackman is betting that Hertz's worst days are behind it and that the restructuring under Gil West will create long-term shareholder value. Narratives can shift fast. Just a few months ago, analysts were focused on EV write-offs. Now the conversation is about opportunity, market share, and bold leadership. Follow the fundamentals, not the hype. Hertz still lost $2.9 billion in 2024. This isn't a fairy tale yet. But with the right cost-cutting, asset utilization, and operational focus, a leaner Hertz could surprise Wall Street. So what should you do? If you're an investor, this might be a signal to watch Hertz closely. Not necessarily to jump in today, but to monitor how management executes in the next 6 to 12 months. If you're in business or leadership, there's also a lesson in resilience. Sometimes the greatest gains are made not by chasing trends, but by fixing what's broken with clarity and courage. Drop a comment. Do you think Hertz can complete this turnaround? Or is Bill Ackman making a high-risk bet? If you got value from this breakdown, hit the like button, subscribe, and turn on notifications. Here on Wealthy Business, we bring you the insights that move markets and shape your mindset. Thanks for watching. And remember, stay sharp, stay strategic, and stay wealthy.